However, you don't tell people to sell everything unless the sky is falling. I made one of the best calls when I told you to dump everything right before the big breakdown in 2008. You could have sidestepped a 40% decline from peak to trough if you'd listened to me. When we'd fallen to Dow 6600, my late friend Mark Haynes told me we'd reached the bottom, which was your signal to get back in. In retrospect, though, all that mattered was that the market eventually came back. That's all people really cared about. My effort to help you sidestep the worst decline in 40 years, aside from the crash of '87, was widely regarded as ill-advised because the market came back. Oh, I'd do it again. I'd make that call, but only if we're facing the real systemic risk that we were back then. And I don't think this outbreak is as serious as the financial crisis, at least not for the stock market. Why not? Well, first, because I think the virus will knock off a percentage point of the Chinese GDP, and maybe no more than 0.25 globally. Because some companies will get hurt, notably luxury and hospitality, travel companies. Don't want to own those people. But many companies will be okay. Some will do much better, including one we're going to hear from later in the show that was up huge today, not Tesla, that I think has more to run. In fact, this event is the ultimate reason why you shouldn't put all your money in an index fund. If you own the stocks of companies with less economic sensitivity and less travel exposure, I think you'll do fine. Otherwise, you should expect some pain ahead. So it's not systemic risk, but I also don't think it's a buying opportunity. Not here, not yet. Maybe tomorrow, Alphabet, parent of Google, laid an egg when reported, even as I think it's an excellent non-China play. You certainly want to watch our special right after the show, hosted by my friend Carl Quintanilla, to learn more about the current state of the outbreak before you make any decisions. If you buy stocks right now, you're making a wager on a vaccine, a cure, or an effective quarantine. I'd rather wait and see if that's possible before pulling the buy trigger, because we're just too close to the highs for my taste. I'll let others make that hard money. I'd rather stand pat, trim the stocks of companies that will be directly impacted so I can buy them back lower or swap into something else that's down a great deal and doesn't deserve to be. Mostly, I want to wait until we get more bad news about the virus because I think more news is coming that's bad. I want to hear the outcome of the Iowa caucuses because Bernie Sanders could win. He's pretty proud of the fact that he's not a friend of the stock market. I want to wait until we have at least a mid-single-digit decline in the stock market. We sold a lot for my travel trust. I feel good about those sales. I'm ready to buy back when things settle down. Bottom line, I don't want you to jump the gun, people. Let's wait for a real dip, the kind we haven't had yet, before we get more bullish on this market. I'm betting that another shoe will drop on this coronavirus outbreak, and I think it might be a mistake to buy before that happens.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.